This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril Hong in Singapore. The top stories this hour. Asian markets set for a cautious start to December as investors await delayed U.S. inflation data for clues on the Fed's thinking. Oil in focus with OPEC Plus sticking with plans to pause production increases. China's factory activity remaining stuck in contraction. The official PMI extending its streak of declines to a record as the economic slowdown deepens. And airlines scramble to keep their fleets in the air while working to fix a software glitch in thousands of Airbus A320s, the most popular commercial jet in history. But first, take a look at how U.S. futures are pointing to some gains at the start of trade. This is after already coming off November, where on Friday it managed to erase those monthly losses. And this is also as stocks extended their rally. We also saw treasuries drifting lower, though, with a 10-year yield moving towards the 403 handle. The dollar, it's worth noting, saw its worst week since the month of June. Now, all this is a bit difficult to draw a conclusion, given how from the Friday action of the Thanksgiving holiday, which already tends to be a bit quiet, we went into the Friday session delayed by an hours-long outage at the CME. We have the likes of Kevin Hassett, a silent nod to the market reaction of word that Trump is set to pick his Fed chair before the end of the year. So that's something that we're watching in the session as investors continue betting on a rate cut from the Fed in a couple of weeks, actually next week, and keeping an eye on OPEC Plus as it sticks to its plans to pause these output hikes amid signs of a surplus that's expected to put more downward pressure on prices, although it seems like a bit of an uptick that we're seeing in the commodity for the moment, Shery.
Yeah, so we will be watching the energy sector and trading in Asia today. But you mentioned also the dollar weakness, of course, the worst week in a few months already, and that's boosted Asian currencies along the way. We had the offshore yuan, for example, seeing its best week since August. We had 6 sessions of gains for the Aussie dollar as well. In Australia, we've been following those home prices, extending those gains, and really those concerns around the inflationary pressures that could stop the RBA from cutting rates. It's been a different story for Japan, though, where we have seen 3 months of losses for the Japanese yen against the U.S. dollar. Today, we'll be watching comments from Bank of Japan Governor Ueda. You're seeing Nikkei futures extending those gains early in the Asia session. Of course, we had already seen 4 sessions of gains for the Japanese market, Avril.
Shery, for the moment, watching Asia as it begins the week with a wave of manufacturing PMI data, along with price indicators that will help to gauge the region's momentum into the year end. And official numbers published on Sunday show China's factory activity improved in November, but remained in contraction for a record 8th month. Traders also awaiting a delayed U.S. PCE inflation reading for September, and this is after bets firmed on that December Fed rate cut, despite a lack of hardened data, thanks to this lengthy government shutdown. And India's Reserve Bank is expected to cut its key rate on Friday by 25 basis points, while GDP grew 8.2% in the third quarter. Expectations for a cut are backed by record low inflation and a wider yield gap with the U.S. Let's bring in Illiana, Jain, international economist at Westpac. Illiana, good to see you. Bright and early. So we are watching a number of delayed economic indicators out of the U.S., inflation numbers this week, PMIs across Asia as well. But talk to us about what you're watching most closely.
So at the moment, we're really focused on what's going on in China. We saw some of the PMI numbers come out over the weekend. And as you mentioned, there's been a slowdown in factory activity. But what caught my attention was really the services side. We saw some weakness there as well. Now, this is really important because we saw comments from authorities noting that they wanted consumption to be a big driving force for GDP over the next 5 years. And that weakness in services certainly isn't going to help. We've seen that consumers in China have not fared particularly well given the weakness in real estate prices and what that's meant for household wealth and the confidence there. And so for authorities to achieve their vision of having consumption be a bigger part of GDP growth within China, they'll have to rebuild rebuild that confidence among households.
How can they go about doing so, you think?
So I think firstly it's all about stimulus, but having very targeted stimulus response. So putting a floor under real estate price falls, and that's something that they've been working on over the last year, and also creating an alternative asset class that consumers feel comfortable investing into to preserve their wealth. Lastly, of course, is putting through more stimulus to help stimulate domestic growth there, domestic demand there as well.
Who will be the most affected across Asia, given the weakness that we're seeing in China?
It's a very interconnected region, so it's hard to say if any particular country is going to be affected. Right now, most market watchers are looking at Japan-China tensions and being a little bit concerned about Japan. In Japan, we can see that they've now got tensions with China, and that's already seen a drop in tourist numbers within Japan. China is Japan's biggest export partner, followed by the US, which, again, they're also having trade tensions there. So for Japan, it looks like a pretty difficult trade outlook for 2026.
Will that derail the Bank of Japan?
For the Bank of Japan, they're looking at factors both domestically and internationally. So like I said, on the international front, things aren't looking too good given both tensions with their two biggest trade partners alongside the global slowdown in growth. But they've got plenty of domestic concerns as well. So for example, wages in Japan, while they have grown in nominal terms, in real terms they've gone backwards through most of 2025. That's really hampered consumer confidence across Japan and has meant that Japanese households maybe don't feel as comfortable engaging in discretionary spending. At the same time, we've seen inflation be quite high, driven by food prices. And while that has meant that the headline number for inflation has been quite strong, it's another thing that households are concerned about when they see prices of staple goods such as rice increase quite dramatically. On the upside, however, we did see a fiscal package announced by the Japanese government. And when we get a few more details around how that will be delivered and when that would be delivered, that will definitely be a tailwind for growth for 2026 for the country.
Illiana, aside from Japan, where else in the region do you think looks vulnerable in terms of China potentially exporting a bit of its tepid growth to other parts of Asia?
So we've definitely seen that China's redirecting a lot of the exports it's been sending to the US to other parts of Asia. And while that has been quite good for its redirection, it hasn't fully made up for the demand that the US takes on. So when we're thinking about regional growth, when we're thinking about growth in China, the US is still a very key factor for that. So the outlook for the US there is very important.
What about when it comes to Australia, where you are? Because, of course, we have seen home prices extending gains and inflationary pressures could make it difficult for the RBA to act.
Yeah, certainly. So we saw a pretty high number last week on inflation. However, when we look under the hood, under that inflation print, a lot of the price increases came from either energy prices, which were mostly base effects, but also a lot of administrative prices, so prices that increased due to policy impacts. Now, if I was the RBA, from their perspective, they're not, these sorts of prices aren't likely to persist for a long period of time, and they're not indicative of demand-side pressure. They are simply policy-related price increases. So as such, while inflation is quite high right now, it's unlikely to persist through the course of next year. We are anticipating that inflation comes down to the middle of the target band by the middle of next year, and that'll give the RBA confidence to start cutting rates from May of next year.
Illiana, how much does what the Fed does or is going to do matter for these other Asia central banks? Because it does seem like maybe they are a little less synchronized going into the first half of next year.
Yeah, certainly. And look, there has been a lot of times in history where these Asian central banks have been quite synchronized with what the Fed does. But right now, when you look at statements from a lot of regional central banks, whether it be the Bank of Korea, the Reserve Bank of India, a lot of it's focused on the domestic side of things. They're looking at domestic demand and how that's faring. They're looking at inflation, and there has been diverging instances of food inflation across different economies. And so what we think for next year, a lot of these Asian central banks are going to be focused on the domestic picture alongside that international picture. And they're probably not going to take as much cue from the Fed as perhaps they have in previous hiking and cutting cycles.
Illiana, Jain, good to have you with us, international economist joining us from Westpac. Now, we keep our eyes firmly on the Fed's trajectory, and the White House National Economic Council Director Kevin Hassett says the markets are ready for President Trump to name the next Fed chair by the end of the end of this year. However, Hassett declined to say whether he sees himself as the frontrunner to succeed Jerome Powell.
We had a great Treasury auction, interest rates went down. And so I think that the American people could expect President Trump to pick somebody who's going to help them, have cheaper car loans and easier access to mortgages at lower rates. And that's what we saw in the market response.
Let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage. Garf, the narrative around the Fed has really changed, right? With the more dovish Fed speak that we got, also potential Kevin Hassett in the Fed chair. What does that mean for Asian markets at a time when we've seen actually currencies being boosted by a weaker dollar?
Asian currencies very much look like having a strong end to the year and probably a strong start to 2026. That's both because the Fed has decisively tacked, for now, towards the dovish side, and this chatter that Kevin Hassett is likely to be named as the Fed chair, and that either way President Trump is likely to name somebody by the end of this year, that's going to keep on pushing the idea that the Fed is going to be pushed towards the dovish side. And at the same time, in Asia, we've got some strong data coming through, and Asian central banks, or Asia Pacific central banks, responding to that. Both in Australia, where the RBA is clearly concerned about what's going on inflation. So certainly unless the data turns, they are going to go on being on hold, and that's also going to encourage those who are betting on rate hikes to come in 2026. You've got the RBNZ calling an end to its easing cycle. You've also got the Bank of Korea staying on hold and signaling renewed concern about whether it's prudent to lower rates from here. So when you've got that sort of a picture across the rest of Asia, not so much in China, that economies are doing well, that inflationary pressures are strengthening, and that central banks are therefore on hold rather than considering lowering rates, add into that mix of a more dovish Fed, and you've got stronger Asian currencies as a key part of what looks like an opening to 2026 that's going to deliver a substantially weaker US dollar.
Garf, perhaps another outlier when it comes to Asians' currencies that are strengthening into the end of the year and into next year is the yen. What are you expecting from Ueda-san and the local currency?
Well, the usual expectation for the BOJ governor is that he will stick to his usual script, which is that, yes, we're moving in the right direction, but it's going to take time, and though we need to be nimble in case things require a faster turn towards hiking, most likely we're going to take our time. So if we get that sort of a message out of the BOJ governor today, that's not going to help the yen much. The yen is sort of balanced between 155, 158 in recent times. It would probably be much closer to 160 were it not for that Fed pivot. And in a lot of ways, what matters the most for the yen right now is really where the Fed's going to go. And if the Fed stays dovish or becomes more dovish, then almost no matter what the BOJ does, it's going to be around about where it is, 156 or so, or moving lower. The dollar-yen rate would move lower, so the yen would strengthen towards 155 and beyond. That's precisely because the BOJ is very much on a glide path towards some stage in 2026 we will hike rates.
Garth, thanks so much. We are waiting with bated breath for the BOJ's rate hike. Garfield Reynolds leads our Markets Live Asia coverage. Now, coming up on the Asia trade, Japan Activation Capital joins us to dig into the country's investment landscape and will be live at the FII Priority Asia Summit with Investcorp CIO and the co-head of Carlyle, Japan. Much more ahead. This is Bloomberg.
Airlines worldwide are scrambling to update software on the Airbus A320, the most widely flown commercial jet in history. Carriers say they've rushed through an emergency fix after Airbus stunned the industry Friday, calling for so-called precautionary fleet action. For more details, let's bring in Bloomberg Global Business reporter Angus Wheatley. Angus, and this couldn't have come at a worse time when we're just ahead of the holiday travel season. So what exactly is going on with Airbus right now?
Yeah, good morning. Yeah, you're right. Late Friday, this recall from Airbus and the European regulator that was followed by the FAA in the US looked like a potential crisis in the making over the weekend, particularly, as you say, at the end of a record-breaking Thanksgiving travel season. But what we saw over the weekend was really a mad rush to address the software glitch that had been identified on Friday to get the A320 fleet back in the air. And that was affecting 6,000 aircraft. And that's a large chunk of the global fleet. When you think of the global fleet being about 30,000 commercial aircraft, 6,000 is a big hit. And required a lot of resources over the weekend to get it fixed. But what we're now seeing is that really the major flyers of the A320, which include American, Indigo, and EasyJet in the UK, have largely completed this task, and within 24 hours of getting this emergency directive. So what was looking like a potential travel crisis at the worst time of the year, as you said, has largely been addressed by some pretty intensive action from Airbus and airlines around the world.
So how much is left in terms of the patches that need to be taking place for some of these other carriers? And what is that going to mean for Airbus's ambitious delivery target?
Yeah, the work is largely resolved. We did see some flight cancellations amongst smaller carriers. For instance, we saw Jetstar, Air New Zealand in this part of the world. In Colombia, we saw some cancellations. But really, the work is done. So Airbus has managed to avoid this as it's racing towards end-of-year delivery targets. It's never a good time to get something like this when you're trying to hit an ambitious delivery target, which at some points of this year it was looking hard, but it looks like it might make it if things go smoothly towards the end of the year. But I think there are some key takeaways. Although we have missed what's looking like a crisis, there are some takeaways here. Firstly is just the concentration of one aircraft in the global fleet, and when that is taken out, then that is potential for big groundings around the world. So that's one thing to take note of. The other thing is, I think we can take comfort from the fact that the regulatory system has worked. It's identified a glitch, and in a weekend, it's addressed it. So I think we can take some comfort from that.
Angus, thanks very much for getting us up to speed. Looks like Airbus for the moment is on track. Bloomberg Global business reporter Angus Whitley for us, and we'll be speaking to one of the largest operators of A320s in the region. AirAsia CEO Tony Fernandez speaks to Bloomberg exclusively. That's coming up on Insight later. We have more ahead on the Asia trade. This is Bloomberg. Hong Kong's government has moved to stamp out mounting public anger after the city's deadliest fire in nearly 8 decades. Last week's disaster in the Tai Po district killed at least 146 people and is raising questions about missed warnings. Let's go to Hong Kong, and our China correspondent Min Min Lo joins us now. Min Min, talk to us about the mood on the ground, the developments over the weekend.
Yeah, I think the mood has shifted a little bit because initially, when I talked to victims of the fire, they had been very dazed. And I think the public mood over the weekend was one of grief, right? We saw long lines of people, over 1,000 people queuing up to give flowers. And Hong Kong started 3 days of public mourning. And officials also observed 3 minutes of silence. There are condolence points being set up across the city. But it is starting to emerge that there have been a number of lapses from various parties because reports show that residents of the estate had complained of the fire safety hazards as early as last year. They sent letters to the Department of Labour raising concerns around the styrofoam boards, the green mesh, and the Department of Labour acknowledged in the statement that they had erroneously dismissed residents' concerns, but they later also said that the materials used had met compliance standards based on documents provided by the contractors. And right now, we know that the number of people arrested has increased. Initially, 3 people were arrested from the engineering company. Now there are an additional 8 people also arrested in relation to this case, and there has been an interagency task force that has started to look into the cause of the fire and what caused it to spread so quickly.
And political tension is rising as well in the city. We are now, of course, just ahead of legislative elections next week.
That's right. And over the weekend, the Office for National Security put out a warning against anyone trying to use the fire to try to stoke unrest or endanger national security. And what was interesting was that on Friday, we understand that the distribution center that I was reporting at, volunteers were told to leave and vacate the area. The government is now taking over, trying to move that online in order to increase efficiency. But at the same time, the National Security Police had already arrested 3 people, including one person who started an online petition calling for 4 demands from the government, including helping the victims involved, taking accountability for the incident, relooking into the system of oversight and regulation for these buildings as well. An Instagram page that raised the 4 demands had been taken down by now, and the authorities also arrested an unidentified volunteer and a former district councillor, Kenneth Chung, as well. So I think many of the volunteers who came out with a lot of goodwill are now feeling that perhaps their intentions are now being scrutinized for the purity of their intentions, and there is a lot of fear around whether that public grief could turn into anger.
Bloomberg's China correspondent Min Min Lo there joining us from Hong Kong with the latest on that fire. More ahead on the Asia trade. This is Bloomberg.
Now, investors squarely focus on the Fed's rate-cutting path. We saw the dollar experiencing its worst week since the month of June, and that's helping some of Asia currencies, maybe not so much the Japanese yen, still looking relatively high on dollar yen at around the 156 level. But let's bring in Bloomberg's chief correspondent for FX and rates in Asia, Ruth Carson. So, Ruth, we're focused on the dollar, and we're seeing how it clocked those losses last week. What's the primary driver of the dollar weakness, and how are investors positioned?
Avril, I think you hinted at it very well at the start with the Fed's cutting cycle and how investors are positioned on that. Very much so in focus for all the macro traders around the world. Let's not forget that the dollar is on, nearly 90% of all trades. And if the Fed is on a rate cutting cycle, it's going back on it, absolutely, that would usually deal more dollar weakness. And we saw that. We saw that in action last week as well. Investors are sort of sitting in the sidelines a bit. Let's not forget that there was a CME outage, which didn't help things last week. So positions were light into Thanksgiving. Then we had a CME outage, plus prospects of further interest rate cuts in the US, dollar down.
So positioning going forward, where does this leave us?
I think it's important to look at the entire macro environment as a whole, and that includes geopolitics. If there is an uptick in risk, for example, a surprise on the trade front, do expect to see further bids in the dollar, because it is ultimately the world's reserve currency. In a rush for safety, in a bid for safety, nothing beats the dollar. And the dollar has been sold. The dollar has been sold recently. So, and yen hasn't really proven to be the haven that it is. So do see positions coming back for a dollar bid, particularly as liquidity comes back as well. Or if the Fed suddenly surprises on the rate cutting front and it's not as dovish as investors expect, we can see a bit of a dollar bounce.
Talk to us about the so-called haven quality of the dollar. I mean, we went from, those real doubts from the month of April earlier this year to where we are now. So what does 2026 then look like when it comes to investors seeking a haven in the form of the greenback?
Liberation Day was definitely a big dent on the dollar, and it's its haven qualities as perceived by lots of people. But that said, talking to lots of people in the market, traders, investors, pension funds, there is no viable alternative to the US dollar. Whether it's a haven, whether it's a liquid asset, there is nothing that beats it. So going into 2026, as investors sort of figure out the dollar's path, there is definitely that risk of a bounce back, and a real one, if indeed the bid for havens accelerate. So definitely, depending on the pair that you look at, the yen looks cheap, Aussie potentially looks cheap as well. But look, in terms of a flight to safety, watch the dollar. It could bounce back at any time.
Talk to us about the rupee roof. I mean, we see how it hit those record lows. How vulnerable is it?
So the rupee is an interesting one. It is obviously seen as a managed currency, and we saw the RBI coming in last week to prop up the currency once again. If you look at the WCRS function and look at Asian performance, the rupee has been the weakest as well, the weakest link in Asia. What's it come down to? The lack of a viable trade deal. Let's remember that India has the biggest tariffs of all its Asian peers. So all in all, expect further pressure. Investors are definitely targeting the 90 level now. The 89 is broken. So is it a matter of time before we hit 90? That's definitely the vein of discussion with investors out there.
Bloomberg's chief correspondent for FX and rates in Asia, Ruth Carson, there. And take a look at how Kiwi assets are trading at the moment. We're seeing downside pressure for the Kiwi dollar as well as Kiwi stocks. Kiwi stocks being led lower by consumer staples and utilities. Although information tech, it's up more than 2%. We are seeing the Kiwi dollar at that 57.30 level after some gains in the previous week. We are, of course, headed for a new central bank head in New Zealand. Sweden's Anna Bremen beginning her 5-year term as Reserve Bank of New Zealand governor today. Bloomberg's Paul Allen joins us now for more on this. Paul, what sort of economy is the new central banker inheriting?
Yeah, a pretty good economy, actually. We did hear from Christian Hawkesby saying that the economy is in a great position for somebody coming in. But Hawkesby also said her main task here is going to be to make central banking boring again in New Zealand. I'm paraphrasing here, but that was pretty much the gist of what he said. There's a desire to get the RBNZ out of the news cycle. This is after the sudden resignation of Adrian Orr back in March. There were also lingering questions about that pause in easing back in July as well, when the economy was struggling. So enter Anna Bremen, who herself is an interesting headline. She's the first woman to lead the RBNZ. She's also the first foreigner to hold that position since 1934. She's viewed as something of a dove, although it's unlikely she's going to need to cut. The easing cycle in New Zealand being viewed as pretty much over. So perhaps their first order of business is going to be a banking regulation. The RBNZ is going to be releasing its review into capital buffers later this month. So there's an expectation that we'll see a lowering of risk rating, a lowering of capital buffers as well. So that's likely to be the first time we hear from Anna Bremen later in December.
Paul, what else do we know about whether she leans a bit more dovish or hawkish based on her tenure in Sweden?
Yes, as I mentioned, she is viewed as something of a dove, although with the economy in reasonable shape, according to Christian Hawkesby, the heavy lifting being done on easing, it's unlikely she's going to need to do anything in that regard. We've got a benchmark rate there at 2.25% in New Zealand. Unemployment's pretty high at 5.3%, but there is an expectation that growth is going to pick up, forecast to be around about 3% in 2026. Plenty of spare capacity in the economy as well, and inflation returning to about 2% in 2026 also. So the RBNZ's pretty convinced that the economy is now in recovery mode, so we're not likely to see the dovish side of Anna Bremen anytime soon, and there's a view she's unlikely to change rates at all for possibly about 12 months.
Paul, thank you so much. Paul Allen in Sydney for us. Turning now to geopolitics, U.S. and Ukrainian negotiators say they had productive discussions about a framework for a peace deal. That's even as talks over the weekend in Florida fell short of a final breakthrough.
It's not just about the terms that ends fighting. It's about also the terms that set up Ukraine for long-term prosperity. I thought we started laying the groundwork for that, most certainly in Geneva. I think we continued that work in our communications throughout the week. I think we built on that again today, but there's more work to be done. This is delicate. It's complicated. There are a lot of moving parts, and obviously there's another party involved here that'll have to be a part of the equation, and that'll continue later this week when Mr. Witkoff travels to Moscow.
For more, let's bring in Bloomberg's Michael Heath. Mike, we've been talking about this for a long while now in terms of what U.S. officials have been signaling, whether we are indeed closer to a form or framework of a peace deal for Ukraine and Russia. Are we seeing a bit more of a sign that among U.S. officials there is a bit of a split, given how Rubio is signaling more work needs to be done?
Yeah, I think it's a really good take on it there, Avril. Secretary of State Rubio he's sort of the more traditional Republican. He doesn't have this warm feeling towards President Putin and the Kremlin and Russia in general that the Trump administration and President Trump especially seems to have, and his chief envoy Steve Witkoff, who was mentioned there as well. They both seem to be very almost pro-Kremlin, you could say, whereas Rubio is very much on the old Democratic side in terms of Cold War thinking there, that Ukraine must be defended, that Ukraine is sort of the outpost of the West, and all support should go towards it. So it is a little bit complicated there. What seems to be happening, though, Steve Witkoff, the President Trump's envoy, will be heading off to Moscow later today. Now, what we've seen is Russia's bombing Ukraine fairly heavily. They're targeting its energy network. Obviously, winter's coming up. They're targeting civilian infrastructure as well. They sort of seem to be trying to break the morale of Ukraine. And so it could be that we start to get Ukraine in a weakened position, and maybe they can push it into a deal. But we really have to see just how strong Ukraine remains there in Europe as well.
Yeah, you can't really get to a deal without the Ukrainian side, and neither. What about the European side? How are Ukraine's allies reacting to all of this?
Yeah, Shery. I mean, look, the Europe and Ukraine were really blindsided by this 28-point plan that came out about a week, more than a week ago that was basically put together by the US and Russia and really reflected Russia's demands there. Now, they seem to have wound that back a bit more towards Ukraine, but at the end of the day, the Trump administration seems to be sort of supportive of this Russian view that Ukraine needs to cede more land, even if Russia's army hasn't been able to capture it in nearly 4 years. And it really just depends where Ukraine's red line is there, because they've got a corruption scandal going on in Ukraine at the moment. They're struggling to keep their forces going. They would like peace, but it's just how much can they tolerate here in terms of how much can they give away in order to get that peace, and some guarantees that Russia won't have another go within a year or two if they do get this. So, yeah, look, there are a lot of moving parts, as Marco Rubio said.
Where's Michael Heath there with the latest on Ukraine and the ongoing war there? Take a look at how precious metals are trading at the moment, especially silver, because it's hitting a record high. We continue to see more expectations of a Fed rate cut in December. This, of course, after we got more dovish Fed speak. Also expectations that potentially Kevin Hassett, the White House economic director, could become the next Fed chair. He, of course, closely aligns with President Trump's thinking that a rate cut is necessary. We continue to see supply tightness as well in this sector. And given the overnight session when we had the Chicago Mercantile Exchange having an outage for hours, that sent metals prices to record highs as well. We had seen thin liquidity in the trading session. So do keep an eye on those miners today in Asian trading. This is Bloomberg. Take a look at how we're setting up for the Japan market opens. We are seeing Nikkei futures slightly to the downside. This, of course, after 4 sessions of gains already. The Japanese yen holding at that 156 level after 3 months of losses against the greenback. Do keep an eye on JGBs, because we heard from the finance ministry that they won't be making any changes to JGB issuance in the 10 to 40-year bracket. So we could see more issuance in the 2 and 5-year JGB. So what does that mean when it comes to supporting futures contracts? Also, perhaps more curve flattening. Of course, we could see firmer short-term yields. And of course, we have the Bank of Japan Governor Ueda speaking later this morning. So do keep an eye on any of his comments. But we have seen this flurry of mega deals here in Japan. Our next guest backs listed companies with strong management teams that choose to accelerate transformation while staying public. Joining us is Hiroyuki Otsuka, founder and CEO of Japan Activation Capital and former deputy head of Carlyle's Japan business. It's great to have you with us.
Right, thank you.
Tell us a little bit more about what sort of companies then you're investing.
Right, so it's a little bit a new technology fund. I started 2 years ago. So we're investing to Japanese large to mid publicly traded companies. But the difference from the typical global public equity fund is we actually support a company more like a private equity style value creation. What means by that is after we invest, before we invest, we talk a lot with the management. We identify the company's CEO who has a strong aspiration to change a company profile, like upgrading a business. And then once we agree, like we're supporting the company, then the company is asking us to join, come as a shareholder. After the investment, we jointly announcing the deal with the company to the public. And then after investment, we touch on the material non-public information, meaning like we support the company as an insider, as a private equity style.
So last year you raised 130 billion yen in order to do this. How much of that have you deployed or committed so far?
So adding to the first fund, we actually also raised about $500 million, 77 million yen this year. So total of the fund size as of now is 207 billion yen. And then we deployed about 30-40% of that. So it's a first fund and the second fund is kind of like a parallel fund. Once we create the second fund, we are investing to the same company with our first fund.
Hiroyuki, this is Avril in Singapore. Just wondering, could you talk to us a bit more about the targets of your investment? You alluded to some of this a short while ago, but are there specifics you can share more about in terms of within tech, what other sectors and the sizes of the firms that you are interested in?
Right. So basically, we invest Japan's publicly traded company, market cap around 200 billion. 200 billion to like 2 trillion yen. So it's considered as our second-tier large Japanese corporation. And then one of the issues of those companies are, as we saw, the Nikkei, the topics went up a lot in the last 5 years. But those companies like a multiple, like a EV/EBITDA multiple or PL, really hasn't changed a lot. One of the reasons for that is that they are not really creating a future growth expectation to the market. So our mission is, once we invest in supporting the execution of the management initiatives, and then creating a future growth expectation, and then which we hope will result in the expansion of the multiple. And so in terms of the industry-wise, we are open to any kind of industry. But one common character of our portfolio companies are the company already doing a business outside of Japan. Because if the companies are revenue coming from 100% from Japanese market, it's a little bit difficult to create a future growth expectation. And then that's multiple expansion is probably not easy.
For some of these firms, what are you seeing in terms of how they are positioning for growth going forward, especially in the year ahead?
So again, one of the reasons why those companies are not creating a future growth expectation is that they are not really using their cash for the future growth. As you know, still in Japan, there's a bunch of companies who got cash on the balance sheet. Then I think it's a time to use those cash for the future growth, and then execute those initiative in a good way, and then creating a much larger profit. But what's happening in the market is they don't have a good courage to move forward, and they got a lot of cash on the balance sheet, and then those were a little bit attacked by the short-term shareholder to make a higher dividend or share buyback. But share buyback really doesn't create a future. The company's future. So our we are people calling us JAC. So JAC is really supporting to use those cash for the future growth. And then I think because we are supporting all those executions, so I think CEO and the management has a much stronger courage to move forward by getting support from the one with a big shareholder to the company.
When you say that all of these companies have some sort of exposure overseas, that also mean that they have exposure to currency fluctuations, right? How do you factor that into their business?
Right. That's one way to look. I think we are a little bit worried about obviously effects, which nobody can control. But our fund is a Japanese yen fund. When the Japanese yen get weaker, obviously the P&L get bigger. Then that's good. That's a positive for the portfolio company. But some U.S. investor or some global investor, if they are putting money to us, obviously weaker Japanese yen is not good for them. But there's some kind of a mitigation that the company's P&L get bigger thanks to the weaker Japanese yen. So
it works both ways, right?
Yeah.
When it comes to, you had, so the first fund and second fund, are you still having plans to open a third fund? Because I remember that you were in talks about overseas investors as well.
Right, and that's our plan. But as of now, the JAC 1, JAC 2, all the investors are Japanese.
How are you doing in actually getting talent, for example, because you were also expanding, and I know the talent is so precious in this country.
Right, yeah, that's obviously, especially finding people from the buy side, it's tough. Yeah, then as you know, I used to work at the private equity industry for about 20 years, and then now new GP coming into the market, some including someone who gave up the Japanese market, now coming back, right? And those people are trying to hire the young talent with a very expensive salary, right? So I already got 20 people as an investment professional, and so I do need to educate them. So some people are not from the buy side, some people coming from a consulting firm or the other industries.
How many more are you looking to hire, did you say?
As of now, we got a little bit less than 20 people as an investment professional, but we probably add 5-6 people But we are startup. My companies are still 2 years young. Yeah, I don't lots of budget to spend money, but.
Hiroyuki Otsuka, do join us again to give us an update on how those funds are going. He's the founder and CEO of Japan Activation Capital and former deputy head of Carlyle's Japan business. Thank you. We do have Japan Ahead every Monday, so do catch that at 8:40 a.m. If you're watching in Tokyo, subscribers can watch live on the terminal using the TV Go function. And we do have breaking news at the moment. We are getting the latest capital expenditure number in Japan. Growth of 2.9% year-on-year for the third quarter, which is much below than economists had expected. It's also a deceleration from the previous month. When it comes to capital spending, excluding software, year-on-year is 2.9 growth. Suffice it to say that it seems Japanese companies are pulling back a little bit on capital spending. Companies' third quarter profits rising, though, 19.7% year-on-year. This is Bloomberg.
The latest from the corporate front, Micron will reportedly spend $9.6 billion to build a plant in western Japan, making memory chips for AI applications. The Nikkei newspaper says Micron wants to diversify its advanced chip production outside Taiwan and plans for shipments from 2028. The report says the factory will make high-bandwidth memory chips a key component for working with AI processors from the likes of NVIDIA. Meituan has reported its first loss in almost 3 years, reflecting the impact of intense competition in China's food delivery sector. It posted an adjusted net loss of $2.3 billion in the third quarter and warned losses will continue this quarter amid the battle for market share with Alibaba and JD.com. Meituan says it remains confident of restoring profitability in the mid to long term. South Korean authorities are investigating a data leak at Coupang that exposed some 33 million accounts. Yonhap News says the alleged hacker is a Chinese national who previously worked at the US-listed online retailer. Police began investigating after a formal complaint from Coupang, which says it became aware of the leaks on November 18th.
And take a look at how we're setting up for the market opens. JGB futures under a little bit of pressure ahead of BOJ Governor Ueda speaking today. We also had capital spending rising in the third quarter, less than expected, growth of only 2.9% year-on-year. The market opens in Tokyo and Seoul are next. This is Bloomberg. This is Asia Trade. We're counting down to Asia's major market opens. We'll be watching the Asian session today, Avril, after we continue to see those expectations of a Fed rate cut. We'll be watching the health of the U.S. economy with Cyber Monday sales, of course, after Thanksgiving last week and, of course, Black Friday.
In the meantime, we have something to chew on from the Asian giant, China, right? We've got those PMI numbers on manufacturing. Things don't look great. Longest streak of contraction on record. So a couple of things to unpack in the session today, Shery.
Yeah, we'll also be watching the Bank of Japan Governor Ueda speaking later today as we also digest those capital spending numbers out just minutes ago. Disappointing to the downside and not rising as much as economists had expected for the third quarter. Not surprising given that there was a lot of uncertainty around those U.S. tariffs when it came to the final quarter. Nikkei stocks right now gaining 0.2%, extending those 4 sessions of gains that we already saw for this market. We are seeing the Japanese yen holding at that 155 level against the greenback after 3 months of losses already against the U.S. dollar. We continue to see the downside pressure when it comes to the Japanese currency as we're watching the 10-year JGB yield at that 182 level. We had seen more details about the finance ministry issuance plans when it comes to those bonds and how to finance the stimulus package here in Japan. Do watch out, as I said, for Governor Ueda's comments later today and take a look at how South Korea is also opening, because we're now seeing November exports rising 8.4% year-on-year, which is beating to the upside. But imports for the month of November disappointing to the downside and growing only 1.2% year-on-year, below economists' estimates. The trade surplus widening to $9.73 billion. Perhaps not surprising given that we have seen some strength in South Korea shipments, those computer chips being shipped out, those auto parts also being shipped out. But at the same time, domestic demand may not be as strong as economists had expected. And we had seen some divergence when it comes to the Kospi and the Kosdaq in the previous session, with the Kospi under pressure, but the Kosdaq getting lifted by reports in local media that we might see the government trying to support the markets. The Korean won holding at the 14.66 level against the dollar, Avril.
Take a look at how U.S. futures are shaping up after managing some slight gains for the month of November. They're not giving us much direction, but we are watching for hazard being waiting in the wings, so to speak. We did get those Black Friday numbers, as you mentioned, Cyber Monday to come. We have the PCE numbers for later in the week as well. All this channeling the energy towards next week when the market expectation is one of a cut from the Federal Reserve. In terms of the U.S. 10-year, though, interesting, we're seeing that yield nudging up towards the 404 handle. Now, the other asset class we're watching, of course, commodities, after we got OPEC Plus confirming that it will pause those output hikes early next year. So you're seeing that reaction in prices. Now, data released on Sunday also show China's factory activity improved but remained in contraction in November, extending its streak of declines to a record as the country's economic slowdown deepens. Let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage. Garf, we've talked through some of the concerns in the Chinese economy. How is that shaping trading, perhaps?
Yeah, it looks like a pretty tough week for Chinese assets. Equities were surprisingly resilient last week amid the China Vanke fallout and concerns about credit markets. But now we've got this economic data. The manufacturing was expected. It was a little bit worse than expected, but still it was kind of expected. But to see the non-manufacturing gauge fall into contraction as well, that sent the composite gauge into contraction for the first time since the end of 2022, which was back when the country was still effectively locked down in that post-COVID situation. So given all of that, it's looking like it's going to be tough for optimism to sustain in China unless, of course, we get some signs that the government is going to step in to help stimulate the economy, to come up with some more reform measures. So China looks like being a bit of a drag on the overall risk appetite picture across the Asia Pacific as we come into this first week of December.
And a little bit of a different narrative coming from the U.S., which seems to be helping fuel that risk appetite given the potential of a more dovish Fed. Take a listen to what Kevin Hassett had to say about who becomes the next Fed chair.
We had a great Treasury auction, interest rates went down. And so I think that the American people could expect President Trump to pick somebody who's going to help them, have cheaper car loans and easier access to mortgages at lower rates. And that's what we saw in the market response.
Is something for Asian markets to cheer as well?
Well, it does look like Asian markets this week are going to get a series of positive leads out of the US market, provided things do keep going the way that they've been going. There's a bit of a feeling that the Santa rally is back on. It was a shock to a lot of people the way that markets went sour in the first half of November, because November has traditionally been a good month for stocks, and the same thing goes for December, by the way. But now that we've had that Fed pivot and we're getting a bit of extra fuel for the idea that the Fed is going to be more accommodative, it's going to be more helpful for risk assets, with the Hassett rumours, with the determination of President Trump to push for lower interest rates. So over the long term, that might bring some volatility into the situation. In the short term, there's a very strong chance that investors will decide it's time to enjoy the Santa rally that they thought was already going to be halfway through. Instead, what they do have is a very strong momentum move out of last week and a half, and we're about to go into the quiet period with the Fed. The inflation data that we're going to get is going to be a little bit partial and a lot delayed, so that's very unlikely to kneecap the concept that we're going to get lower rates in December. The hopes then will be that the Fed doesn't sound too cautious about continuing rate cuts in the coming year. That would be the risk, but that's a risk that's more than a week away by now. I think this week we're likely to see equity investors regain their mojo both in the US and for most of the rest of the world too.
Garth, are we likely to see treasuries, against the backdrop of those Fed pivot expectations, likely to regain their mojo? And I ask this because is there a sort of disconnect between what central banks are likely to do and what the debt markets are telling us? We're looking at the 2-year yield in Japan rising to 1% for the first time since 2008. I mean, what is your sense of the dynamic that's emerged?
Well, the dynamic that's emerging is that the Fed is heading in one direction towards rate cuts. Most of the rest of the world is heading to either staying on hold or even hiking interest rates. So that's why you've got short-end yields in Japan rising, although I tend to think the BOJ doesn't hike this month. If they don't hike this month, then they'll hike in one or both of the first two meetings next year. And you look in Australia, where traders are now very confident the RBA has finished with rate cuts, and indeed that it will consider rate hikes in the second half of 2026. You've got the potential that the ECB is done with cutting rates. You have the RBNZ definitely done with cutting rates. A lot of central banks around the globe are now going to be on hold or considering rate hikes. The Fed is heading in the other direction, so that's a positive for treasuries. For global bonds, it's a more fractured and fragile picture because of that central bank divergence.
Garth, thanks so much. Garfield Reynolds, who leads our Markets Live Asia coverage. Now, in terms of markets, we're also talking about commodities, specifically oil prices. OPEC and its allies have decided to stick with plans to pause production hikes during the first quarter amid growing signs of a surplus in global oil markets. Let's bring in Stephen Stepchinsky, who leads our Asia energy coverage. Good to see you, Steve. So we've just come off this weekend where OPEC Plus seemed to do what most of the markets anticipated. Why are we seeing this reaction in prices? Put things in perspective for us.
Sure. I mean, I think, yes, they had signaled earlier in the month or last month rather, in November, that they were going to, of course, pause this increase between January and March. Now they reaffirmed that. And I think there are a few ways to read this, right? We have oil prices up a bit more than 1% today. And one, it could be that you never really know what OPEC Plus is going to do. They've surprised the market multiple times. So the fact that they reiterated this call, their view is that this, for seasonal reasons, they decided to stick with this, and that does help to take a little bit of the heat off of that bearish element in the market. They're not flooding anymore. They're kind of pausing, reassessing the situation. So I think there is still that is something that could help the prices go up a little bit today. Another thing, of course, is the ratcheting up of pressure on Venezuela from the Trump administration. He talked about, how flights shouldn't be going through airspace. Venezuela, while still not a major exporter, and what they do export go on shadow fleet vessels to countries like China, any other ratcheting up of pressure on the country, on the government, or their oil sector would be somewhat bullish for prices. So I think you're seeing both of the reaction in the market today is not just OPEC Plus reaffirming, but also digesting Trump's comments on Venezuela over the weekend.
How does the demand outlook look right now? Because we've been discussing Chinese economy and the data that we're seeing, and they don't look that great.
I think that's the big thing in the market. Not only are you flooding the market with production from OPEC Plus up until through the end of this year, but you're also having output increase from the United States, or at least stay quite strong from the United States, with the backdrop that demand isn't terribly strong in China. I think the market was expecting Chinese demand to be much stronger this time of year a few years back. I think there was this expectation that post-COVID Chinese demand would really pick up and help to digest some of the barrels coming into the market. Now, there has been a lot of Chinese buying earlier in the year, but that was mostly for stockpiling. And now that stockpiling has essentially finished, you are seeing a softer picture for China, and that does add to that glut situation. You've had the IEA, you had banks warn about how we are entering a situation in 2026 where you're going to continue to likely see this weakness from China and other major buyers, as well as increased supply, which will overall add to this frothiness in the market and help to push down prices.
Stephen Sevchinsky there, who leads our Asia energy coverage. And take a look at some of the big movers across Asia. We were watching those precious metal stocks, given that they have risen to record highs, especially when it comes to the price of silver, also the price of copper. We had seen that outage in the Chicago Mercantile Exchange already giving to some disruption and some thin liquidity in the overnight session. And the silver price in Asia just touched a record high, so do keep an eye for those mining stocks. Also, do watch for some other idiosyncratic movers in the Australian session. EQT and CVC Asia Pacific scrapping talks with AUB about a possible takeover offer. Also, we're watching Treasury Wine. Their shares slumped to a fresh 10-year low after the company announced they would write down the value of their U.S. business. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how Japanese assets are trading, with equities falling for the first time in 5 sessions. We're hearing from the Finance Minister Katayama saying that they're considering revising corporate governance codes, that corporate governance reform is a priority, and that Japan will add support for firms before and after listing. Of course, this theme has really propelled the Japanese equity markets. We're also watching JGBs because the Finance Minister just recently announced plans to increase their issuance of short-term bonds. So we were expecting short-term yields to firm up, and that's happening with the 2-year yield rising to 1% for the first time since 2008, Avril.
Shery, the FII Priority Summit, meantime, is taking place in Tokyo, and it brings together key leaders and policymakers from Saudi Arabia and Japan. The summit's focus will be on robotics, AI, trade, and global supply chains. Let's bring in our first guest from the event. Rishi Kapoor is Vice Chairman and CIO at Investcorp. Rishi, really good to see you. We've just been talking about Japan and some of the stimulus needs and the push. Talk to us about what you are seeing there.
Well, hi, good morning, and thank you for having me. I think what we are clearly seeing from our vantage point as a global private markets focused investment firm at Investcorp is the emergence of this corridor, if I may call it that, of capital flow, trade flow, and investment flow between Japan and the Middle East, routing itself through and via India in particular, but ASEAN broadly speaking. And that corridor of bidirectional trade and capital and investment flow is really what is very interesting for firms like ours to tap into, because for the first time, it's, like I said, it's bidirectional. And more importantly, it's also opening up a world of opportunity for us to deploy capital behind in areas and sectors of high conviction and potentially high return in the future.
Rishi, is this flow through the corridors that you speak of going to be agnostic of the BOJ's path? Do investors need to see hike for more conviction?
I think that's a great question. And to be honest, I think the BOJ's path is actually one of the underpinnings for this corridor to emerge and cement itself the way I described it. Because for the longest of times, for many decades, the growth trajectory for Japan in general was relatively muted in terms of nominal GDP. And with the emergence of some degree of acceptable normalized inflation in the Japanese economy, whilst a continuing relatively low interest rate environment behind it means that the prospect for strong, attractive returns for equity investors in private markets, but also, arguably in public markets, are very strong over a medium to long-term horizon. And that's really what is giving rise to that increasing investor interest. That is, of course, supplemented beyond what the BOJ does by the emergence of a large set of opportunities within certain sectors, many of them related to technology and innovation, but also related to energy transition and infrastructure, both digital and physical, that support this increase in interest for capital flows between the Middle East and Japan. And I think last but not least, the work that the BOJ is doing in terms of enhancing governance in particular and regulatory reform is an important pillar of how we see this market evolving.
How does the weakness of the Japanese yen factor into your calculations on investments in Japan?
Well, look, the weakness of the Japanese yen today obviously provides an attractive entry point for new investment activity into Japan. But the key over here is what happens in the future. If the yen continues to weaken, that would obviously not be a great thing for a foreign investor denominated in a different currency. So I think some degree of expected policy stability around the currency as we look out over a medium-term horizon would be greatly helpful and positively impactful for investors as they consider investment opportunities in Japan, facilitated by the current yen weakness, as you said.
And Rishi, you've seen opportunities both in China and India, right? We continue to see the economic slump in China in the economic data that we're getting recently. What are the opportunities in these two countries? And do you have a ratio of how much of your investments go into these two economies?
Well, today, look, Asia in aggregate, including the Middle East, is a relatively modest part of our overall portfolio, about 10%. But it's 10% from a very small, very low level over a very short period of time. So it's growing really fast. Now, as we look out into the future, it would not be surprising at all for us to see a continued growth trajectory in our investment portfolio in Asia, including India, Japan, and China. All of these economies, by the way, there are certain macro characteristics that one can debate all day long. But what is more important is the micro characteristics, choosing the right sectors where there is going to be a flow of capital, there's going to be an appropriate balance of risk and reward, and where one can expect to generate some attractive returns over a medium-term horizon. As I said earlier, in Japan, those sectors relate to business services, technology, infrastructure. In China, the energy transition is a very interesting theme, as is domestic consumption. India is almost all about domestic consumption across a variety of sectors. So, we see a lot of opportunity there. And last but not least, in the Middle East, just the very significant impulse that the local governments are providing to the build-out of regional infrastructure and enhancing domestic consumption as well as consumer services provides a very interesting backdrop for investment as well.
Rishi, what would you say is the biggest risk for both public and private markets in 2026?
I mean, from our vantage point, we think some of the key risks in 2026 from public and private markets really are going to be around the degree of stability or uncertainty related to interest rates, particularly in the U.S., because there is a bit of a tussle right now between, whether the Fed in particular is more worried about the inflationary impulse resulting from slightly more sticky inflation, sticky wage inflation in particular, but also the impulse from tariffs to inflation. And on the flip side, the slowing employment growth is the opposite side of that same coin. And I think that degree of uncertainty around the future trajectory of interest rates is probably an overarching concern for us, because to a large extent what the markets have underwritten or discounted currently is a continued trajectory of lower interest rates. To the extent that doesn't manifest itself at the levels that the market is anticipating, that could be somewhat problematic for market levels.
Rishi Kapoor, really good to have you with us, Vice Chairman and CIO at Investcorp. We have more ahead on the Asia trade. This is Bloomberg. Hong Kong's government has moved to stamp out mounting public anger after the city's deadliest fire in nearly 8 decades. Let's get to Hong Kong, and our China correspondent Mimi, we have new details on how the fire started.
That's right. At a press conference last week, the authorities said that the fire had started with the green mesh, but preliminary testing, they say, show that the mesh has in fact met fire compliance standards, fire resistance standards, and they are now putting the blame on the styrofoam boards that are covering the windows, because that is highly flammable and it has melted or caused some of the windows to burst, which then caused the fire to move into the building. So it was both spreading outside and inside the buildings. And the fire department explained why they couldn't use helicopter to throw down water bombs, because they said that would only douse the exterior of the buildings with water, but the powerful downdraft, they said, would create more oxygen to cause the fire to spread even faster. And an interagency task force has been set up to now investigate the cause of the fire, because now there are speculation about how that happened, right? Whether people were smoking, and the task force has started to look into that, and also to look into why the fire spread so fast.
Min, there were also some further arrests made. What can you tell us?
Yeah, so an additional 8 arrests made to other consultants as well as contractors related to the scaffolding, but also 3 more arrests has been made on national security grounds, including an unidentified volunteer, a former district councillor, and 1 person who started an online petition demanding 4 demands from the government to take care of the victims, to take accountability for this, and also to start an independent inquiry. So there seems to be concern that the public anger needs to be controlled.
We're running up into a hard break. Sorry I have to cut you off there. Min Min Lo in Hong Kong. This is Bloomberg.
Take a look at how markets are trading across Asia. We're seeing a little bit of a divergence with Nikkei and the topics down at the moment after 4 sessions of gains. We continue to see a weaker Japanese yen, strengthening a little bit today, but still after 3 months of losses against the greenback. JGBs is what we're watching right now, given the finance minister's plan to issue more short-term bonds. So 2-year yields now rising to 1% for the first time since 2008. And remember, in about half an hour's time, we do have the Bank of Japan Governor Ueda speaking today, so we do want to watch out for whatever comments that we can get about a potential rate hike in December. This coming at a time when the Kospi is holding steady, the Kosdaq is gaining a little bit of ground, a little bit of divergence continuing from the Friday session. The government will announce tax incentives and other measures to boost the market. Avril.
Yeah, Shery, I mean, we've been talking about today how the China factory activity numbers will also be shaping trading in the Asia session. Let's get you up to speed with what we're getting on these global PMIs based on manufacturing for the month of November out of major economies across the region, including Japan. We are seeing it versus the prior reading a bit deeper into contraction territory at 48.7. And of course, we are also tracking what's come out of South Korea below the 50 level at 49.4. And some of these other perhaps a bit improved readings from the likes of Taiwan as well as Indonesia. That's picked up to 48.8 for Taiwan and 53.3 for Indonesia. Of course, this is all coming against the backdrop of investors and economists trying to figure out the pain given the trade turbulence we've been seeing of late, Shery.
Yeah. Let's head to our next guest, who leads Japan's largest ever buyout fund, investing across multiple sectors. Joining us exclusively here in the Tokyo studio is Carlyle Japan co-head Kazuhiro Yamada. Kazu, always great to see you.
Nice to see you. Thank you for having me.
So you raised almost $3 billion last year, right? So how much of it have you deployed or committed so far?
Yes, we this year, we made 2 investments so far, and also we are now making a so-called due diligence for 4 deals. So we expect to do another 2 deals is committed by the end of this year.
So what is important in these deals to you?
Yeah, it's there's lots of good quality business, and but I also undermanage and the resources. So I think that those opportunities are great potential to grow domestically and also globally.
Are there any specific sectors that you're more focused on?
Yes, we have 3 sectors. We're very keen on, and one is the manufacturing sector, since there's a variety of good products manufacturing, but not enough resources to global. And the second is healthcare. Healthcare is also a growing sector here in Japan. The third is maybe so-called software and also SaaS business. And the key word for our target is one is the great business, good business, quality business, but undermanaged, under resources. The other one is great technology enabled to increasing productivity. That's a 2 key theme for us.
Kazuhiro, Avril in Singapore, in terms of some of the more successful plays that you've had, this includes for your exit in Orion. Can you tell us about what the strategy is going to look like going forward, especially when it comes to exits, and why are public markets the right route?
Yes, thank you very much. And Lion is, great brand and a great quality of a product, but mainly selling Okinawa. So we made several initiatives after investment. One is the higher enhancing management layer, CEO, CMO, and also global sales, top of global sales. The second is increasing product lineup, including RTD and also liquors. The third is enhancing global sales. Before we invest, after invest, global sales make 4 times larger than that. So there's a significant improvement on the revenue side and also profit side. As a result, EBITDA margin growth of revenue and also ROE is top of peers. So and also strong brand with a clear equity story. So we think IPO is a right route for our exit. And also before we invest, we committed to founders family and also management. If we try to have this company IPOable company, and if we can do definitely we have IPO for the exit. And Carlyle is already a 10 global offering IPO. I think it's highest track record IPO exit, and as a result, we had 80 times demand from the market. So I think it's a very successful IPO.
Are you thinking of doing a bit more of the same with other firms that you have in the pipeline? Can you talk us through the thinking behind that as well?
Yeah, we have a 3 industry team, TMT and consumer retail, healthcare, and manufacturing. I mentioned before at the this program, and each team has about 100 potential company, potential opportunity, and we realize there's a significant opportunity from succession and also delisted corporate carve-out, and so there's a bunch of attractive opportunities here in Japan. But in order to access those opportunities, local network and the reputation, track record is quite important.
It sounds like a very busy time for you. Did you manage to hire everyone you wanted to hire at this point?
Yeah, that is top of my mind, and it's very difficult to hire the top talent here in Japan. But not only for the hiring, retention of an existing professional is a kind of a challenge. So maybe 40% of my time is spending for retention and human resources.
So I remember you said 10 more investment professionals this year.
Yes.
Is that still the target? Are you there? What about next year?
Yes, now we become a 30 professional. End of next year, we also committed 2 more. And by the end of next year, we're going to be at 35. And one of our iconic things is that 10 out of 35 going to be a female. So it's a new kind of a trend. I think diversification is quite important for our business.
We have heard, of course, of these drives in order to improve corporate governance, and of course, diversification is key. Finance Minister Katayama just now speaking at the investment forum, saying exactly the same thing. Are you seeing those trends continuing, having momentum here in Japan this year and next?
Yes, definitely. Corporate governance is one of the key for leading growth of Japanese economy, and also diversification is quite important. As you know, our society face decreasing decreasing population. So why we leverage female capability? So this is significant underutilized. So I think is that trend going to be a continue.
Kazuhiro, talk to us about what you're seeing in the M&A landscape more specifically into 2026 and perhaps in the year ahead as well.
Yeah, this year, compared with the last year, first half number is significant. Actually, total M&A is more than 3.6 times, and the buyout market is also over the 4 times. I think it's not a one-time phenomenon. There's a significant opportunity, corporate carve-out and also delisted and also corporate activism. And so I think that trend is going to be continue, and next year maybe we're going to be more busy.
How does the weakening Japanese yen factor into your calculations, especially when it comes to exit valuations or M&As as well?
Yeah, fortunately, our fund is a yen denomination, so not a significant impact for considering so-called investment criteria. But in fact, the yen depreciation is impact to our portfolio level, particularly sourcing material is quite high. So we are careful about supply chain and also price increasing opportunity. That's a main concern for us.
Do you have a base assumption of where the yen goes from here?
No, it's very difficult. If I know, I put all my money to foreign exchange. But basically, we have some so-called version, so-called best case and worst case, and we make best case and worst case or each transaction.
I guess it all comes down to trying to guess what the BOJ will do next as well. But at the same time, just because the rate hikes coming from the BOJ have not necessarily helped boost the yen. When do you expect policymakers to move, and does that make a difference for how the businesses that you're looking at here in Japan operate?
Yeah, I think foreign exchange rate is, is very difficult to control. So, while maybe, Japan, Takaichi, cabinet is, put economic stimulation and have create a more, kind of a deficit. So I think, it's not easy to, come into yen going to be appreciate. But in the end, Japanese economy is growing up. I think it's going to be yen going to be appreciate. That's my expectation.
Long term, just because of the strength of the Japanese economy.
Exactly.
Do you think that the new administration is helping in that push towards economic growth?
Yes, definitely. Current cabinet is very eager to stimulation or support for economic growth. I'm very surprised. Very short time, Ms. Takaichi introduced several, economic initiatives in detail, and also with a massive, supporting plan. So I think it's, first time to see, Prime Minister change and immediately introduce such a, stimulation plan with a detailed plan. I think I expect a lot on Takaichi-san.
Kazuhiro Yamada, really good to have you back in the Tokyo studio, co-head at Carlyle, Japan. We do have more ahead on the Asia trade. This is Bloomberg.
As we count down to the start of trade in the Greater China region, we're watching Meituan when trading gets underway in Hong Kong after it reported its first loss in almost 3 years, reflecting the impact of intense competition in China's food delivery sector. Our Asia equities reporter Sang-Mi Cha joins us from Hong Kong. Sang-Mi, what are you expecting?
Yeah, the Meituan shares are already the worst performer among the Hang Seng Tech Index this year. It's still slumping 30% YTD. And it's because of the intense competition that you just mentioned in the domestic on-demand and food delivery sector, right? It was always that monopoly, always the first and always the best in terms of the delivery services. But after JD.com and Alibaba all came into the sector, it's just struggling a little bit. And the CFO just Friday had said that, it is because of this brutal competition and price wars that they're seeing these bleak earnings result. But it is a similar strand that we're seeing in Alibaba and JD earnings as well. And Morningstar analysts actually predict that from 73% gross transaction value for Meituan in 2024, it's going to slump and it's going to lose that shares to 55% in 2027. So now looking at that, Alibaba, though, they predict that it will actually gain more shares from about 21% to 40%. So what we're expecting is going to be somewhat more of a duopoly.
Yeah, and you mentioned the price wars really depressing earnings, right? What does this mean for investors then that are suffering from losses in Chinese markets at the moment?
That's correct. So the MSCI China Index members have seen 1.1% negative earnings surprise for the July and September quarter. And because of this, a lot of the analysts are saying that this is because of the anti-involution push that Beijing has had for months. It is not really working to curb that competition again within the market. Again, it's the same story that goes back to the price wars in delivery market. But most of this was because of the real estate market and soft retail spending, so the consumer dragging down the index. But of course, it's not always about news. We've seen great sector moves for materials and financials. So materials companies have benefited from the gold rush, really. So the likes of Zijin Mining and Jiangxi Copper have done really well. Their net income rose by more than 50%. So all of this does point to some of these bright spots in the market. But again, the anti-involution push for us to see the results, and I'll say we have to wait until next year.
Asia Equities reporter Sang-Mi Cha there. And some of the other top corporate stories that we're tracking at the moment, Micron will reportedly spend $9.6 billion to build a plant in western Japan, making memory chips for AI applications. The Nikkei newspaper says Micron wants to diversify its advanced chip production outside Taiwan and plans for shipments from 2028. The report says the factory will make high bandwidth memory chips a key component for working with AI processors from the likes of NVIDIA. South Korean authorities are investigating a data leak at Coupang that exposed some 33 million accounts. Yonhap News says the alleged hacker is a Chinese national who previously worked at the U.S.-listed online retailer. Police began investigating after a formal complaint from Coupang, which says it became aware of the leaks on November 18th. Airlines worldwide are scrambling to update software on the Airbus A320, the most widely flown commercial jet in history. Carriers say they've rushed through an emergency fix after Airbus stunned the industry Friday, calling for so-called precautionary fleet action. For more details, let's bring in Bloomberg Global Business reporter Angus Whitley. Angus, what a surprise during the holiday season. Is this a done event, or are we expecting more fallout?
This on Friday, as you say, this was looking like a serious crisis, because it was a software upgrade that was going to affect 6,000 Airbus A320s, which is, as you said, the most widely flown commercial airliner ever, right at the end of the peak Thanksgiving travel period. So what we saw over the weekend was a frenzied effort by A320 operators to address the software upgrade and the glitch. And really remarkably, within 24 hours of the emergency directive from the European regulator and the FAA in the US, operations are pretty much back to normal, particularly amongst the major A320 operators. They include American in the US, Indigo in India, EasyJet in the UK, and Wizz Air, which is a Hungarian discount airline, addressed all its A320 issues overnight. So it was pretty remarkable. But if we avoided a crisis, I think this issue does highlight some key factors which regulators and airlines probably have to address. The first is, I guess, it's aviation's key man risk. How much concentration there is of the A320 in the global fleet. The global fleet is about 30,000, 35,000 aircraft. And so if you have an issue affecting 6,000 planes, that's about 20% of the global fleet that needs to be rectified. And that's a serious issue. And the second question is, how could sophisticated flight software be effectively fried by solar radiation, which is what happened in this case? So it's key things that regulators will have to look at in the future.
Yeah, it also raises the question, given how it was a bit of a shock, cosmic radiation was as an issue, are we looking closely enough at some of the gaps? How are plane makers looking to address future gaps?
Yeah, that's a good question, because if you look at the A320, this is a tried and trusted aircraft. This is, flies millions of passengers a day, and it's sold upwards of 10,000 models. So regulators will have to look at the upgrades that go through in these aircraft. A320s are famously fly-by-wire, which means that they're effectively digitally controlled for the most part. And software upgrades, still have to be scrutinized, and Boeing knows all too well that the 737 MAX suffered to horrendous fatal tragedies late 2018 and early 2019 due to software malfunctions on its 737 MAX. So the regulators will have to be aware that even though these are tried and trusted aircraft, got years of very safe performance, they still have to be looked at and question how these upgrades can be affected by, it's effectively natural phenomena like solar radiation.
Some continued scrutiny given this latest incident. Angus, thank you so much. Our Bloomberg Global Business reporter, Angus Whitley. And we'll be speaking to one of the largest operators of A320s in the world. AirAsia CEO Tony Fernandez speaks to Bloomberg exclusively on Insight with Haslinda Ahmed. We have more ahead on the Asia trade. This is Bloomberg.
Yields reaching record highs across Japan. We are seeing the two-year yield topping 1% for the first time since 2008. This after we got more insight into the finance ministry's issuance plan in order to support Sanae Takaichi's government expenditures. The issuance will be in short-term bonds, 2- and 5-year JGB. So we are expecting firmer short-term yields and perhaps more curve flattening throughout the week. JGB issuance in the 10 to 40-year bracket is not happening. So we'll continue to watch the latest developments in the JGB space, as we're also watching the yen, a little bit more strength in today's session. But after weakening for a third consecutive month against the U.S. dollar, the Carlyle Japan co-head Yamada just spoke to us saying that he sees the yen gaining in the long run, given a stronger Japanese economy. Of course, we will be looking for clues coming from the Bank of Japan governor, who's due to speak in just a few minutes, Avril.
Shery, we are also watching out for how Greater China markets react to that bout of weak data over the weekend, which showed us manufacturing PMIs on its longest contraction on record. And the likes of Bloomberg Intelligence, actually highlighting they expect broad economic weakness and that the numbers actually hint at a further downdrift in consumption, because if you look at services, that also dropped sharply into contraction. This is a sharp contrast to a flat reading in 2024, and then put that together with what we saw from Meituan, right? The first loss in a couple of years, and this is coming with intense competition against the likes of Baba and JD. So all this eating into their margins as well. We'll watch how that plays out in trade today. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China Show is next. This is Bloomberg.